including for you. The Bank of Canada cut its key lending rate again by another quarter point, and at the end of the day, most chartered banks passed the saving on to you. But the cut was less than expected and led to a major selling off of our dollar, now at its lowest value against the U.S. dollar in more than 3 years. And as Mike Armstrong tells us, it comes at a crunch time for Canadian retailers.
Whether you're in Montreal or anywhere else in Canada, you get basically the same nervousness. Even Canadians who don't feel like they've been directly affected by the global financial crisis are a little on edge.
I don't feel the pinch yet, so it's hard to say.
Some a little apprehensive.
Of course.
Frugal, I think, might be a good word for this time of this kind of climate.
Now, sticking with the climate theme, this country's economy is a little like today's weather in Montreal. Gray and gloomy, but it could be worse. The Bank of Canada forecasts will avoid a recession, but barely. It says the global economy is headed for a recession, and the U.S., our biggest trading partner, is already there.
It was a little bit startling just how blunt the Bank of Canada was.
Bank of Montreal senior economist Michael Gregory says he was surprised to hear the R word from the central bank, even if he thinks it's a little optimistic. In fact, the bank is slashing its projections. Just this past July, it was predicting the economy would grow by 1% this year and 2.3% in 2009. Today, it dropped those figures to 0.6% in each year. 2010 looks better with growth back to 3.4%, but for the time being, whether it's a recession or not, it's going to be close.
Whether there's a negative or a small positive, I don't think that as much as the issue is the fact that the prognosis is quite dismal.
Now, to stimulate the economy, the Bank of Canada today went back to what it's done before, over and over. It again dropped its key interest rate. Go back a year and it was 4.5%. Today's quarter-point drop puts it all the way down to 2.5%. The question now is, how will consumers react? With the holiday season approaching, how will belt tightening affect retailers?